Ladies and gentlemen, let's talk about how to trade these trend lines. Let's talk about how you can use trend lines in your trading. Can I move this picture up? Why do we need trend lines in our price action trading? We use support and resistance, as you know, on a regular basis, taking it from the higher time frames, bringing it to the lower time frames. But trend lines are a big win and a big bonus on top of your support and resistance and your supply and demand. They make a big difference to which way you're going to trade on any given day. But this is just the system, as you know, guys. I'm just going to show you a 50-50 system because, as you all know, I always tell you guys that the system is 50-50. All the systems are 50-50 because you're trading against other human beings. And if you don't know me, I'm Rob. And for those of you who do know me, I'm still Rob, and it is still Coffee with Rob. So we're having coffee and we're chatting about these trend lines. After we've done the trend lines, we'll go and talk about the strategy that's actually going to make you the money in the markets, because that's really important to have a strategy, to have a business plan. I actually don't understand why so many people get into trading with no business plan. It's a bit strange, don't you think? Would you go and start a factory down the road with no plan whatsoever, not even knowing what you're going to make? Are you going to need some tools? Are you going to need to pay rent? How much rent am I going to need to pay? Do I need staff? Do I need trucks? All these things come into a simple business plan. Yet when you get into trading, you just go on a course and they tell you you're going to make $1 million and you jump into trading. No plan, no nothing. You just get into trading with the hopes that you're going to make some kind of a profit along the way. And then you find out that that doesn't actually happen and you lose more trades than you actually win. And you think, what on earth's going on here? I paid $5,000 for that course, half the money I've got, and now I'm not making any money when I get home. That's a bit odd, isn't it? Anyway, let's go and have a look at the charts. Let's go and see how you can actually trade with trend lines and how trend lines can help you in your trading. So you already know, I've shown you guys a million times how to pick up the support and resistance, how to pick up the supply and demand. And we can go over that again. I'll in fact give you another video on supply and demand sooner rather than later. But today we're talking about trend lines. Now, what is a trend line? You know that we trade three ways. We trade with the trend. Trend is your friend. We trade in a range, top and bottom, and we counter trade. And one of the best trades that you can get in the market is a counter trade. Guys, do remember, by the way, I just have to bring this up while we're here, that trading is risky and most traders do lose money. And if you don't like losing money and you're adverse to risk, you're probably in the wrong game and you probably shouldn't be trading. Nothing that I say here constitutes financial advice. I don't have any predictive capabilities. I don't have a crystal ball, and I can't tell you what's going to happen in the future. But what I can help you with is the ability to take a trade, to keep you in the game. I'm not going to make you rich here, but I am going to keep you in the game if you follow what I do. I don't give advice. This is just what I do. It's my ideas, and everything that I do is just my opinion. That's all. Now we look at this. This is a trend line. Now, how do you draw a trend line in? You take a point and you draw it across and you follow the trend. Pretty basic, pretty simple. The only way that a trend line really counts is if it is on 3 points. So 1, 2, 3, 4, 5, 6. There's quite a lot of points on this particular trend line. Don't make it rocket science and try and put it right on the point or right on the edge. I mean, I've been known to draw a trend line not touching anything, just to like follow the trend. Just I don't leave lines on my chart most of the time. And it's pretty obvious when you look at this. This is quite a bullish trend going straight up. It's not difficult to see it. You don't need to draw a line to actually see this. But the reason we draw this line in is so that we can see if it's got the 3 touches, so we can see if it's a genuine level. Now we know that the level is genuine, but how do you play this? And the simplest way to play this is by looking at the chart and saying it's broken through the trend support. This is a support. You can draw the resistance on top as well, but you don't need to in this point. All we're doing is drawing the support line. It's broken through that support line, and now you control it exactly the same way that we control the support and resistance. In other words, if we have our support and we have our resistance on top, if it goes into that and it breaks through it, it's broken through it. Now, you can wait for it to come back and retest and then continue on. It's a good way to trade, and we do it on the support and resistance as well. I prefer not to bother with that. It's my simplicity. If I get a red candle that's closed and it's come out of the level, for me, that's a good trade. And if it goes back and retests, it's not a big deal. It's still going to go in my direction. You can see that this is broken through that support and it's heading in that general direction. This one actually did go back up and retest. Big red candle down. Now it's teetering along here. My opinion is that it's still going to continue on short because these normally resolve to the downside. It's a bit of a upside down flag pattern, and they normally will resolve to the downside. If it's going down, if it's going up, it'll resolve to the upside. What I do see on this particular chart, and the reason we have a short trade in on this, is that we have a gap down here that hasn't been filled. Gaps always get filled. The mistake that people make is that when people say gaps must get filled, they think that they must get filled immediately. But no, a gap can get filled in 30 years' time, as long as it gets filled. The idea behind a gap being filled is it will always be filled, but nobody really knows when. So you can't actually trade them. But if you spot them and there is something going in that direction, you can assume for yourself that there's a strong possibility that the price might actually go down to that gap and fill it. And we're not talking about gaps today, but I'll just bring that up because it is in the trade. And along this line here, if I was to draw it in now, there is a strong support level, from support and resistance, a very strong support level along this area here that you would normally take from your day chart, which you can also take from your 4-hour chart. We trade on the 4-hour, as you know. So that line is in there. That line in the sand is there. And that's why I've put my take profit there. Because when it hits that line, it might bounce and go back up. And it's a good area for take profit. And that's a trend line counter trade. But you get many trades that are not counter trades. For example, this is in a bearish trend. It's pretty obvious. You're looking at the lines going down here. There's about 4 million candles falling to the downside. Kind of tells you something. They're all red, and it's kind of saying to you, do you know what? I'm bearish. That's what it's saying. Let's be clear. That says I'm bearish and I'm going to the downside. So it's falling down. It comes back up, hits that trend resistance, and then carries on going down. Comes back up, doesn't quite touch it, but it's there and thereabouts. Comes back down, comes back up, touches it. There's only two things that this can do. It can go up or it can go down. Why? Because the market's 50-50. Do I have to tell you again? Come on, man. It's 50-50. But what you have here is the high probability, and in all likelihood, that it'll probably bounce off here and go down again and continue on with its trend. The only time that you can change your mind on that is if this green candle goes outside of this, closes above it, and goes the other way. Then it's telling you, do you know what? I've changed my mind. I'm breaking structure. So that's why my stop loss is above that line. Because if it hits that, it pretty much said to me, do you know what? You've lost out. I'm on my way. But my take profit is down here. And my take profit is actually down in an area where there's a demand of money, a huge demand of money waiting down at the bottom here. If you want to know more about supply and demand, go check out my other videos. They are there, and they'll give you all the information that you need. But if you want to trade a trend line within a trend, there you go. You just follow it down inside that trend. Germany 30, it's in that trend. It's broken through to the side. And now it's going sideways. But it has broken the trend, and it is setting a double top. It is telling you that it's actually going bearish. It's giving you all the information that you could possibly need in a trade. Now, sometimes your trend lines do this to you. Sometimes you're in a range. Let's draw the range in just so that you get a fair idea of what the range might be. It's not perfect, but it is there. There's a level there, and there's also a level round about here. You've got this range where every time it hits the top, it's going to come down. Every time it hits the bottom, it's going to go up. We could move these lines further out. We could take them up to there, could take them down to there. But what I'm looking for is more touches. So I'm putting them a bit narrower so that I get a better feeling for that sort of range that's developed. Now you can use trend lines within your range. So while you would normally take trades in a range, you would like buy at the bottom, sell at the top, buy at the bottom, sell at the top, buy at the bottom, sell at the top. You know what I'm saying? But now you want to know, when can I buy within this range? And you can use trend lines for that. What you can do, you can take a trend line, you can draw it up here in the short term. There it breaks the trend and it's heading to the downside. Pretty straightforward. You can do it on the downside as well. So you can say, tell you what, how do I know when it's really going the other way? Take a trend line, draw it in there, 3 or 4 touches. It is short term, and there is also a big level down the bottom here, by the way, if it breaks down. At this point, you see it's come through the bottom of the range, and you think to yourself, well, maybe it's going to go further. But how do you know it's turning around in the range? You use the trend line. It breaks through the trend resistance. It's going to the upside. It actually came back and retested perfectly on that line and on the trend, what is now support, and broke to the upside. You can use trend lines in that scenario as well. So trend lines are actually very, very, very useful tools within your price action trading. They help you a lot. On this particular trade, it's helping me in the sense that I see this as bullish, but it's now in the middle of this range, and I'm really not sure if it's going to complete the run. I draw a trend resistance across the top. Now I wait for it just to break that line in the sand and give me more confidence to say, do you know what? I can take the long trade to the top. Or if it breaks the line to the bottom, gives me the confidence to take the short trade down to the bottom because it's in the middle of the range. But I don't like to trade anything that's in the middle of the range. I prefer for it to play out, and then I'll take my trade. So I'd rather wait for it to get to the top and then break that trend and then start heading to the bottom. So you can use your trend lines even within the range. There's the 3 ways you trade, guys. 3 ways you trade. You trade with the trend, you trade in the range, and you counter trade when it breaks the trend. Those are the 3 ways you trade. The counter trade is probably the nicest trade to take because you know you've got a lot of room to go on. Whereas if you're trading in the trend like this, you're not quite sure how much space you've got left. Your risk to reward might always be quite poor. But trading with the trend is good for business. Trading in a range is good for business because you get this trend. This range is always a trade. There's always a trade there for you. And then you get the counter trade, like I say, which is usually quite high up. I mean, if you're counter trading way up here at the top, you've got all this room to make the profit, which is fantastic there as well, here as well, when it went to the upside and it moved up. Great trade. It makes you good. That's trading with trend lines, and trading with trend lines is really quite simple, not complicated, not out of the realms of being able to get it quite simply. I always say keep it simple. Don't make it complicated. Don't overcomplicate your trading. There's really no point in doing that. But what's the strategy to making money? Because that's a system, price action system that we use on a daily basis to make some profit. I mean, we all know how we make profit and what we do, but a lot of you out there are walking around saying that a win rate makes you money, when we all know that a win rate doesn't make you any money. See, the trouble with a win rate is you'll win 8 trades in a row at $50 a trade, and then you'll lose the 9th trade for $1,000, and that kind of puts you in a net loss. Win rates don't make you money. Win rates are something you can boast about. To make money on a win rate, effectively, you've got to have a 100% win rate. There's a company out there that would win 20% of their trades, and they were the most profitable company on the street. And you've got to ask yourself the question, how is that actually possible? Simple, really. It's about making more money on your wins and losing less money on your losses. How does that equate? If I flip a coin, heads or tails, 10 times, you'll agree with me that in all likelihood and high probability, it'll land on tails 5 times and it'll land on heads 5 times. You have to agree with that. That's the high probability. We all know that it probably won't be perfect and there'll be 6 to 4 or 7 till 3. That happens. It happens all the time. But the high probability is half-half, 50-50, because it's a 50-50 coin toss. If I said to you, for every one that you lose the one. For every one that you win, give you 2. I don't know anyone that wouldn't take that deal. That is the best deal on earth. Because anyone in their right mind with the right psychology will understand that the odds are stacked in their favor. The odds are stacked in your favor if you take that deal. Now that's how we work our trading, the same way. I'm not saying that trading is a coin toss. What I'm saying is you're going to take 10 trades. And the likelihood, no matter what your system is, no matter what you paid for your course, or how clever you think you are at trading. You know, most people go on a course and they come back with all these abbreviations and terminology and they think they know everything about the market in 2 weeks. I've been doing this for 33 to 34 years, guys. Seriously. And I still lose trades. I still see my account in the red sometimes. And I think, what on earth? Because that's how life works. Trading is 50-50. Doesn't matter how experienced you are, how much information you've got. But what you come back with is all the information on the market. You almost know who invented the stock market, but how's that going to make you money? The only way to make money in the markets is with a business plan. And I'm giving you that business plan right here, right now, for free. And I've just told you what the odds are and how the odds work. But how do you put that into action? How do you actually make that work for you? Well, the first thing you've got to do is keep your stop loss the same on every single trade. Guys, this is like a 2 or 3 step business plan. You don't have to write it down. You can come back to the videos if you want and rewatch it. But if you can't remember this, then don't trade. It's really, really simple. Effectively, I risk 1% of my account always. Always keep your brokerage account the same size. Don't let it grow. Don't let it shrink. If you want to change the size of your account, make a conscious decision to do that. So if you have a $25,000 account, keep it at a $25,000 account. Remove your profits every month or every week or whenever it is you want to remove them. But don't let it grow to $100,000 and leave it in the brokerage account. If you can, withdraw the profits and put them in your bank account. Keep the trading account the same size. And then you risk 1% of your trading account on every single trade. So you keep the stop loss the same. So if it's a $25,000 account, you're looking to keep the trade at $25,000, so $250 risk on every single trade. How do you do that? Let me show you how you do that. Let me give you some information as to how you do that so that you get a good idea of how to take a trade. And I'm just going to use this particular product as an example so that you can understand how this works. Now, I'm not going to take a trade. I'm just going to show you how to take a trade. Let's say you wanted to buy this. You want to buy it at this price, but you want to keep a $250 stop loss. All you have to do in most cases with most platforms, I mean, MetaTrader 5, you are going to have to download a program of MKL5, but this is CTrader and TradingView and all of them, you can do this. Click on stop loss. And if you don't have this, you're just going to have to work it out a different way. What you do is you just click on the stop loss and say, I want my stop loss to be $250 away from the cost. The first thing you do is look at the trade and say, well, if I take a long trade here based on this trend line situation, where do I want my stop loss? Well, if I look at this, I want my stop loss down here at about 32.70. Why? Because it's below that low and it's below that trend line. So that's good enough for me, 32.70. All you got to do is go down here, type in on the stop loss side, 32.70. Take out the 0 there, 32.70. Now you know, at the bottom here, it tells you with 0.03 lots, you're going to lose $166.38. But you're looking at a 1% scenario, so you want that to be around $250. All you got to do, What's 0.4 lots? $221.52. That looks fair to me. Doesn't have to be 250 exactly. 221 looks great. What's my take profit? What's my risk to reward like? My take profit's at 3430. Let's see what that looks like. If I put 3430, 3430, how will that look? So what that's telling me, my risk to reward's at least 2 to 1, because if I lose $220, and if I win $420. That's my trade. In other words, if I buy this, I make $400 if it reaches there, and I lose $200 if it reaches down my stop loss. Easy peasy. That is how you take the trade. Now you know how to take the trade. I'll put my ugly mug back in place and I can talk to you. That's how you take the trade. Not complicated, not rocket science. Now you take every single trade the same way, managing your risk. Important point to note is that trading is all in here. It's all in the psychology. It's all in the mind. It's got nothing to do with squiggly lines. Squiggly lines don't make you money. You make the money. So now you have to manage that trade. So what do you do if it goes into a loss? Do you dollar cost average, make the trade bigger? Do you move the stop loss away because you don't want to get out the trade? You probably both know the answer to both those questions. Because if you don't, you haven't been watching me for very long. If you do, then I'm getting through to you. You see, if you move the stop loss away, effectively when you looked at that trade and you said this is the trade I want to take, and you worked out your stop loss, that was your invalidation area. You said to yourself, if the trade reaches that point, my trade's invalid. So what's changed now that you're losing? Isn't your trade still invalid at that point? So why, just tell me why, you would move your stop loss away. You'll have the answer to that. It's in your head. Your head's telling you the answer. You don't want to accept the answer, but you know the answer. The answer is you want to stay in that trade and claw on for as long as possible because you're afraid of showing the loss, getting out of the trade and showing the loss on your account. So you hang on to that trade when you shouldn't be hanging on to that trade. So don't move your stop loss. Leave it there. You dollar cost average and make the trade bigger. No, you don't, because that always ends in disaster every single time. But now you have a bigger problem. And you'll say, how could I have a bigger problem than that? Well, the bigger problem is when you go into profit. That's your bigger problem. Because what happens when you go into profit is you go $50 into profit and your hands on that clicking button and thinking, I need to sell this. It's on the sell button. I need to sell. I need to get out. I need to close this trade because I'm $50 in profit. Even though I'm targeting $400, I'm going to take profit at $50 because a profit, isn't it? I've got a profit. No, the only reason you're taking that profit is because you're sitting watching the charts. Not because you think the trade's ending. It's because you're sitting watching the charts and you're seeing the profit and you're finally making a profit after all those losses. You're finally making a profit and you think, I got to get out of here. I got to sell this trade and move on. That's why you want to sell at $50. Now, how do you get over that? Because that is patience, sitting on your hands, trusting the process, fear of missing out. All of those emotions are coming into play here. You're scared of losing that $50. Funny how if you go into a loss, you're prepared to hang on with your fingernails until that thing goes back into a profit, or even double it up. But when it goes into a profit, you won't hang on at all. You let it go. You see, I think the opposite. I think when something goes into a loss, I want to get out of this as quickly as I possibly can. And I think when it goes into a profit, I want to hang on to this for as long as possible and see how much money I can make. But that's how my brain thinks. But how your brain thinks is the opposite. You're thinking when you're in a loss, you need to hang on. When you're in a profit, you need to get out and run with the money. And I'm trying to make more money because when I see green, when I see profit, I start thinking, I'm in a profit. I can make more here. I can make more money out of this. I could even double up and make more money out of this. Now we're talking dollar cost averaging because now we're adding on, making more money out of the process. That's when trading becomes good. So how complicated is that business plan for you guys? Is it overcomplicated? I don't think so. While you're here, don't forget to join the members area. Down there, there's a button. You get the trade of the day every day, get all the perks, and you become part of the A team. Don't forget to join us on the live shows. At the moment, every week on a Thursday until such time as they tell us it ends, FundYourFX is kindly sponsoring a 2K $10,000 challenge account that one of you guys can win every week, which is great because all I got to do is do a draw in the comments, comment on the video, I'll do a draw, and one of you will win it. So we've already had 3 people that have won it. It's really great. Really great. And if you want an account like that or an instant funded account, go down there and go and grab it. There is a link there. There is videos on, I talk about prop firms and how good or bad they are. You know, I spent my whole career totally, well, the last few years anyway, against them. And now I've sort of changed my mindset because people can actually learn something out of it and get something out of it. And it's actually quite helpful. I hope that helps you guys. I hope it's useful to you guys. I also have a free Forex book for you down there in the description if you want it. Don't forget to subscribe. At least like, comment, and subscribe, guys. That's good for the channel. We want to grow the channel and get the message out there. Because you guys need to get the message out that you're not going to make $1 million in a week. And it's hard work to be a trader. It's a career. It takes time and it takes experience to become a competent trader. Not even a good trader, just a competent trader. Just a trader that can stay in the game and not get bailed out every 3 weeks. Thanks for watching, guys. Keep your feet on the ground, reach for the sky. I'll catch you on the rebound and I'll see you through the window. Cheers, ciao, and bye.